terms of policy direction, when we look across the Chinese market, not just relating to commodities, but all segments, policy implementation and direction is really, really key. So we do know that commodities demand has somewhat of a flaw given the infrastructure cycle that we are seeing in China. If we look back at the commodity super cycle many, many years ago, it was really driven by the demand side. And the future commodity cycle is probably going to be driven more so by the supply side. So if we look at Xi Jinping's ultimate aim in terms of being carbon neutral, it's all about the commodity companies that are really spending their capex on renewable energies, really ensuring that how they produce is the least pollutant way of doing so. So they're the companies that look quite interesting. But in general, again, when we look at the ultimate aim of the Chinese government, it's about ensuring that we see domestic demand remaining very robust and this sort of, emphasis on domestic demand really being the key driver of GDP. So the biggest risk actually for the market is policy response and ensuring we don't see too much over-tightening.
Catherine, it's Nancy here joining the conversation. Do you think that risk of over-tightening, though, has abated a bit, given concerns about inflation? And I know the inflationary outlook is very different from what's taking place in China, but if you look at what's happening to producer prices there, how concerned are you that that could trickle down to the consumer side, and then that does raise more concerns among authorities?
So, interestingly, the corporates we have been speaking to since the fourth quarter last year have been indicating this rise in input prices. So definitely something to monitor. However, when we look at the CPI situation, it's definitely benign, or we're not too concerned about consumer inflation. If we take a step back, and what the PBOC did last year in terms of adding stimulus into the economy was very disciplined and very different to, let's say, a lot of other central bankers around the world. So when we look at stimulus as a percentage of GDP, it amounts to around 6% in China versus 25-30% in the US and Europe. So when we do see that cycle change, whether it's globally, the Chinese have already embarked on this tightening cycle. In fact, we'd argue that they're 8-9 months ahead of the rest of the world. Then that 6% is a lot easier to digest than some of the other stimulus measures we have seen elsewhere around the world.